Hey guys, thanks for tuning in the channel. Did anyone see those Defiance dividends? IWMY only still 57% is pretty good, but I was shocked by the dollar amount of IWMY. What was it, 65 cents or something? Or 69 cents. Okay, well, call it 70 cents, but man, let's look at this. IWMY trades options on the Russell, and look how volatile the Russell's been. Volatile and directionless. Let's look at the past month. Those are the options they've traded, was right there. So this is every strike price they've sold. So, you can see on this day they made a full profit. On that day, they made a full loss. On that day was a full loss. On this day was a full profit. This day's a full profit. That day's a full loss. That day's a full loss. This day's a full profit. This day's a full loss. This month was entirely binary for them, is my point. None of these did they hit in the middle. They either blew out the strike and kept going, or they went under the break even and lost money. But I see very few where they finished in the range. Like maybe right here, they finished and almost made a full profit. Right there, they made a full loss. Right here, they made a full profit. Right there was a full loss. Right there was a full loss. Right here was a full profit. Right here was a full profit. Right here's a full loss. Right here was a 2-day trade, and it happened while I was gone, but that was a full profit. And then I missed a couple of trades on Monday and Tuesday. I'm sorry. Then there was yesterday's trade was a full profit, and today's trade is trying to be a full profit. It's early in the day. It's only 10:59. But that's not how they usually work out. They usually aren't that binary. Let's just look at SPX. This is what JEPY trades. And I haven't actually looked at this before, but let's look at their monthly trading results and see how many full and partial profits they had. So that one's a partial. That one's a full. That one's a full. That's a partial, full, partial, full. But they have some partial profits where they hit in the range sometimes. Like anything would. You're going to do that. You're going to do that lots of the time, where you land right somewhere inside of the box. You don't make full profit, but you also don't have a loss. You land somewhere in the buffer zone. That's how options work. And that's actually the highest probability area for you to land. So you do land in the box lots of times. My point was about Russell. It's just how it was trading this month, where everything was binary. That's not a great setup for a cover call strategy. And so sure enough, that one, I'm sure we're going to see that one lose a ton of NAV. There is a ton of NAV depletion. I hate to even look at it, but when something like that happens and you have a month that volatile and you have that many full losses, you're going to have a bad indicator, or a rough time of it. There we go. Settings. Let's turn that off. Okay, let's get a daily chart out here. Okay. So yeah, you can see it's been a tough time for this stock as far as the NAV, because the NAV gets depleted by the amount of the dividend every month. So it is what it is. Let's look at, that's why I like this one better, and why a lot of people do. SPY-T. And the trade-off is it only pays a third of the dividend. The problem is when you pay a huge dividend like that, it comes out of the NAV and it tends to make the NAV go down. So you can either usually have a gigantic dividend and not steady NAV, or a small dividend and steady NAV, a smaller dividend and steadier NAV. Kind of the trade-off that you have to deal with. Anyway, all right. So 69 cents. All right, well, let's look at these other ones. So 65 cents for triple QY. So looking back at some of the past ones, I don't even have May's on here. I think May was 91 cents or something. But anyway, it's been a while since we've had this low of a payment. It's actually been since last December. Okay, and what was happening in last December? Well, the markets were melting up. So the way that JEPY and triple QY are acting, they've kind of gone into bull market mode. This is a chart of what JEPY trades. It's just straight up. The problem with those straight up markets is it compresses the volatility. Sometimes you can physically see the boxes getting smaller as you go higher. In any event, it's been a hell of a month. So this is the trade-off, though. So you can own SPY T, and you can have exposure to this, and you'll get some of the upside, and you'll get a 20% per yield. And then you can own JEPY, and you can also have exposure to the same thing, but you get 60% yield. But it comes at the expense of you get extra NAV depletion with the JEPY. You get 3 times as much NAV depletion. 60 is 3 times 20. All right, so let's look at NASDAQ. NASDAQ's the same thing. It's just been straight up. This is their chart. They have a lot of binaries too. That was a full profit, full profit, full profit. But there they have a partial profit, partial profit, partial. But then they have 5 full profits in a row, then a partial. Still, though, I haven't seen anything as crazy as IWMY as far as going back and forth from one side to the other. I want to look at that. I want to look at that chart again, because the market for Russell's essentially gone nowhere. Here, this is a month ago, right here. So a month ago, we opened at 2061. Right now, we're trading at 2050. 10 points, what is that, like 0.5%? It's not very much. Basically unchanged, but on the way to being unchanged, we had a bunch of bear traps and bull traps, and it's just been kind of a crazy looking chart how it oscillates from one side to the other. It's just zigzags from one side to the other in a more severe manner than something like this does. Okay, well, anyway, so markets like this lend themselves to cover call strategies, so that's why this one's doing better, obviously. Okay, so 65 cents for triple QY, 46 cents for JEPY. Well, I mean, they've never paid that little. They paid 50 cents in December. And December was a similar market to now. Let's look at that really quick on JEPY. So JEPY trades SPX. I'm going to scan back to December. Try to show just December. All right. That's not a bad job. Okay, so look at December. So December was very similar to how the market is now. Conditions like that compress volatility. They were only able to pay 50 cents that month. They were only able to pay 46 this month. I could overlay it with the chart of VIX, but it's just going to show VIX getting crushed. So I'm going to stop talking about VIX and volatility and stuff. Let's look at some other stuff. I do want to say, though, USOI paying 75% is awesome. And that kind of surprises me because the IVs aren't that high. They aren't that level. But what these guys are doing in my opinion, and by listening to Jay talk, they of course they pay the extrinsic out on all these funds. Yeah, they pay the extrinsic. That's where they start. When a fund has capital appreciation, Jay knows that by the end of the year, he has to distribute at least 90% of that. And basically, they want to get rid of all of it by the end of the year. They aren't trying to hang on to capital. So if he has a gigantic month with a bunch of capital gains, with NAV appreciation, capital appreciation, whatever you want to call it, along with he's still making this daily grind. These are puts, right? Is this a put strategy? I get confused. There's so many. Yes, this is a put strategy. So he sold the 72 put there, but selling a put is bullish. So he's betting the market to go over 72. All it does, full profit. Then the next time he sold a 74, boom, full profit. The next time he actually sold a 76 and it looks like a partial profit. But then the next time sold a 77, was full profit, rolled up here to the 80. And anyway, you can see it's been a great month. Most of these have either been full profit or have landed within the box somewhere. And if you're within the box, you're a partial profit. If you're on top of the box, above the top line, you're a full profit. You don't start losing till you're under the bottom line of the box, which they haven't been all month. Okay, so I guess right here. But it looks like they rallied up by the close that time. So these guys are doing a great job. But my theory is, even though the premiums on this are more like 50s and 60s, they paid 75 this month because they're paying some of the capital appreciation. People think these things don't capture upside, but they do capture upside. They capture the amount of the difference of where the market was when they sell the option and the strike price. So this day right here, market was at 72.96. They wrote the 74. So they captured that $1.04, and that goes to the NAV. That make the NAV go up. Same thing the next day. Whatever the difference is between where the market was when they wrote it and the strike price, it's usually $1 or so. They capture that when the market closes above when the market's doing like it's doing lately and just blowing up every day, they're capturing that all the time. So Jay had some extra money to pay, and that's why he paid. That's why he paid more this time. That more than the IV would kind of indicate. All right, I'm going to fact check myself. We're going to do a cash secured put in USO, which is what USOI does. I like to look at the graph better. Okay, and this looks like the covered call profit loss graph for those of you that are familiar with options, because it in the money put is the same thing as a covered call from a financial standpoint, profit and loss wise. There are differences, but okay. So these guys, let's see, these guys do it for the most recent expiry. So we're already halfway through the day. So let's look at what the next one's selling for. So they usually like to write the 60 delta, Jay told me. I thought it was the 65, but he corrected me. Okay, right, there's the 38 delta. There's the 56 delta. So we'll try the 81 strike. Okay. Okay, well, that's going to be close enough. I bet you, depending on where the market closes, they'll probably sell the 81 or 82. This one, the 28 is going to expire today. But yeah, they'll probably sell this one. All right, so now I want to check the IV on it. So the IV on it, see, is only 26%. The IV on the 81 is 23%. Let's look at today's expiration. The IV, what do they sell today? The 80, but I'm just afraid the IV, these are going to be stale because this isn't this is a lot of the IV has shrunk out of these options by this time of the day. So that's why I hesitated to look at it. But even the highest, there's a 35 IV, 36 IV. You can see what I'm saying. They have no way they should be paying a 70 IV or being able to make a 70 payment. I'm telling you, they're monetizing the NAV appreciation that they're able to capture. The only reason I'm making such a big deal out of it is because everyone notices that these things have problems on the downside with NAV, for sure, and they do. But they, believe it or not, they do capture upside. I see it all the time. You can see it in the spreadsheets. They don't capture a lot of upside, but they do capture upside. So anyway, it's just something to be aware of. You have to factor it in. It's not like they capture no upside. And also, it's not like they capture all the downside. They do capture less downside than the parent asset sometimes. So anyway, you have to factor it all in to look at the complete picture. All right, so Tress paid 15 cents. Spy T is no fun, paid 33 cents. I mean, it pays 20% every time. It's a great fund if that's what you want. QT is the same way. It only pays 20% every time. Triple QT, but it's not going to pay till next month. It hasn't been around long enough. Okay, so something else I thought was interesting. Look at these. I'm usually thinking of dividends and per share amounts. But if you look at these distribution rates and percentages, you could see JEPY paid 33. Okay, so SPY T is a sister fund to JEPY. They're monetizing the same source of income, the daily options from the same pit, the same, sometimes even the same strike. Not always, but it's very closely related. Okay. They're only making 33%, yet Jay's still able to pay 20%. Okay, so that leaves 13% left over for extra NAV appreciation, called a NAV bank to build up for upside. Okay, well, that's fine. So it's unfortunate, I think, that they aren't going to make the triple QT a 25% payer. I think they could have done that 25%. I asked Jay about that. He didn't want to do that. He wants to leave it at 20% where it's a consistent number that people can count on, but leave enough room for, to build up a little bank of NAV reserve. Let's just call it NAV reserve. So on this one, paying out 20, they would have 32%, they would have extra NAV reserve compared to SPY T. So I think the QQQT is going to be a big success in theory, based on information like this. It ought to capture more upside than SPY T does. And of course, it'll capture more upside than triple QY does or than JEPY does. But it ought to be an upside monster. Now, when they bring out an IWMY, if it's also 20%, and I don't know for sure if they are bringing it out, and I don't know it's going to be 20% or higher, but Jay didn't seem to like the idea of paying higher. I think he's going to keep it 20 if they do have something like this. Well, this one would even do better on the NAV because you would build up more of a NAV bank. So if that's something you're interested in, I don't know if they're going to call it IWMT or RUTT or something, but anyway, it ought to be interesting. I'll keep my ear out for it, and we'll keep an eye out for it. Okay, so let's see what the market's doing today. Let's look at what Tesla's doing. It was blown up last time I looked. Well, that's what happens when you don't look for an hour. It was absolutely just blowing up. It opened with a huge gap. In any event, now they filled the gap. So what do you guys think? Probably go lower. That's what I'm thinking. I mean, if we're here, we'll probably go down to 190 or something. Now that we filled the gap, if we hadn't filled the gap, it probably kept trending. But we'll see. Sometimes it fills the gap and then turns around from there. We'll take a look at it. Okay, well, I took a look at the crash trade because I was wondering maybe if these guys had rolled out, because these options they sold have got to be just worth pennies. They haven't rolled out yet. Anyway, I'm sure they're just going to let these expire worthless, I guess, and then roll out tomorrow. But I just checked right here, and right before I came on the air, and yeah, they still have the same option, the 177.50. So okay. So now let's look at Little Coney action, Coinbase. Okay, so they have 2 strikes going into next week. The 225s and the, what is that, 237.50s or 237s. Anyway, they still have plenty of room for upside. And they could use a little upside. Look at this massive pullback. Let's see what kind of shape Mister's in. All right, so these guys rolled this 1 strike into next week. They'll probably roll the rest of them into next week soon. They aren't in any danger of blowing out any strikes, I'll say that much. It's good news for the short strikes, bad news for the NAV right now for Mister. NVIDIA has like 4 strikes, and they rolled them into next week, or 3 of them they rolled into next week. They rolled 2 of them into next week, and then I think they established a new one. I'm not sure if they took this one off or not. My charts messed up one day, and I lost some data. All right, so let's look at the buffer report. I don't know if I did. I tried to look at it last night. I don't think I broadcast that episode. I shot an episode last night, and I didn't even put it on air because nothing worked. Yeah, stuff like this. I tried to show the buffer report, and ever since I came back from the trip, the buffer report it doesn't work, and I can't seem to make it work. Oh well, I'm probably just going to scrap the buffer report. And it just doesn't work. Well, I do have a new report coming out that does work that I'm real excited about, called the Total Return Worksheet. And this is more what I'm going to start emphasizing is true yield and total return and stuff like my most recent videos have been talking about. So what this can tell you, this is going back and it's looking at a guy that bought Tesla. I can put in any amount I want to start, but in this case, I put in 100,000, and then I compared it to the same guy that bought shares of Tesla, $100,000 worth of Tesla. But then I made 4 or 5 different scenarios. I said, okay, wonder if this guy reinvest 2/3 of the dividend in Tesla itself. Okay, that's all right. Wonder if this guy reinvests 2/3 of the dividend, but puts it in Tesla, uses the Tesla dividend to buy shares in Tesla. Who would do better? Okay. Well, then lots of times you hear from growth investors, well, I just want to have growth stocks and I'll just sell my growth stocks. So I also tested what would happen if somebody just had a lot of Tesla stock, $100,000 worth of Tesla, and just sold and just, instead of worrying about the dividends, when the other guy got a dividend, sold the equivalent amount of Tesla stock to pay the dividend. You can do that too, as long as Tesla keeps going up, to some point. So, I mean, if you have a real growth stock that's growing, I mean, I wouldn't recommend it, but it's a viable alternative. Anyway, I tested all 3 of them, and I'm shooting the video, or actually I have like 5, and I tested some variations on each theme. In any event, and I did before and after taxes for Ethan, and on the after taxes, I assumed that somebody's in the highest tax bracket, somebody like Ethan, because it's not fair he makes a good point. It's not fair to look at these returns and not think about it. But now there are people that have them in different environments and stuff. So it's whatever. But yeah, I think you guys will like the results, and I think you guys will like the results. All right. So I'm teasing that video, but that's all I'm going to tell you. But that's why the buffer report doesn't work, because I've been working more on this total return worksheet. All right, guys. Well, I appreciate you being here. And let's look in one more time at the indexes and see what they're doing. Pretty much everything blew up this morning, is pulling back. The same thing Tesla's doing. Right now, if I check the spreadsheet, we'd expect about a 3/4 profit. You know, of course, above the profit box is full profit. The bottom line is break even. Maybe 2/3 profit right here. The green part of the box, just to refresh everyone's memory, is the extrinsic portion of the option. That's the part that I was referring to when I'm saying that's the NAV. The green part is the amount of NAV they capture in an up market. This day right here, that amount of green, the amount from 19,750 to 19,800, those 50 points, they captured that. They captured that. As the market closed at, almost captured it. The market almost closed to max profit, but they captured 46 points of that. And that goes into the NAV. And the people, the arbitrageurs, the authorized participants, market makers, they see that, and it goes into the NAV when they have a big win like that. By the same token, when something like this happens, when they have a full loss on the day, that comes out of the NAV. So the NAV just kind of bounces around, and then Jay pays 20%. Well, in the case of triple QT that just came out the other day, he pays 20%. This is actually profit boxes for JEPY, which is different than triple QT, but it's related source of income. All right, guys. Well, I appreciate you all. I'll be back later. See ya.